anytime that you do not pay for something, you are being used. It is much deeper than monetary value. People are looking to exploit you, and they understand that you're excited about the market, and don't let people take advantage of you. It's better to pay a little bit now and be completely free, opposed to being bundled together like a derivative or an exotic tranche and being taken elsewhere and sold to someone else. Let's talk about candlesticks, and let's get into trading. If reading candlesticks was all that you needed to make money in the market, why isn't everybody rich from candlesticks? You can study all the patterns that you want. And I'll ask you guys have talked to a lot of millionaires. How many of them, the first thing they bring up to you is candlesticks? Never. That's not an answer. The Cuban bring up candlestick and he knows how to trade. Elon knows how to trade. It's not the candlestick formations, it's risk to reward and defense. And I'll let him go into it later. But if it was just doji and a double hammer and a three-legged doji, everybody would do it. And also,
sound like wrestling moves.
Oh yeah. But if that was it, everyone will win. If you go off a higher time frame, so we were talking about Head and Shoulders earlier.
Yeah,
it's better if you go off a higher time frame, like a weekly or higher, for that pattern to work. But you first need to know what the true direction of that asset is. Candlestick patterns will not get you to freedom. The thing is, and I love Steve Neeson, and I love the work that he's done. But a lot of people talk to you about chart patterns and candlestick patterns because they can't give you a clear answer of how to win right now. That's not it. Number one, I've talked about it before. Risk to reward is most important. If you are a terrible trader, you can risk 1 to make 25 and only win 4% of your trades and still be profitable. Let me be real. If you put in chart time every day, you can win 4% of your trades or 10% of your trades on accident. And then number 2, knocking down the number of trades that you take per year. When I was doing my own analysis, I look back and I'm like, if I cut my trades in half, I probably would have made 4x more. So be mindful of that. I was talking to Mac last week about how to hedge. And he was saying, if you have positions in the market long-term, if you're not doing cover calls, how do you hedge? Number one, the biggest asset that you have is time in the market. I know you get tired of me saying it, but the truth does not need to be sexy or packaged up for it to work. The time in the market is the number one hedge. And we were talking about it yesterday at Buttons. Like anybody that trades short-term or invests short-term, you usually get killed if you let it simmer, marinate, cook for a couple years, you'll be okay. Invest in companies with a small drawdown. So we talked about the fundamentals to look for in a company. Add to that list, how much does it draw down per year? That number needs to be underneath 22%. If you have a company that's drawn in AMC and GameStop drew down 80, it's not a good company to invest in. Told you beforehand. And then also not taking your money out of the market is a way to hedge. So people talk a lot about diversification, but the biggest trick that people are playing on you is having you invest short term and thinking that you're going to get rich when the real answer is you're going to get rich on the back end. And the greatest determining factor on whether or not you will be rich or not is 2 things. 1, did you create a business with a serious competitive advantage? And number 2, the frequency of which you invest in the market. I'm going to tell you right now, and you guys have seen me do it in real time, build your own brand. You need a business first that you can depend on. 2, invest in entrepreneurs and companies that are better than you, and you'll be able to dominate. You need these 2 things working in tandem to be okay. But the frequency of which you put money into the market is going to have the biggest impact on your life. Because what good is it if you get a killer entry and you only have 75 shares? If that number of shares that you entered at that good entry will not allow you to get closer to freedom, it really doesn't matter. And then let's go back to the Mo conversation while we're playing defense, and I'm gonna let my hoop represent some human beings, right? So there's a couple of different kind of moats that you want to have, and ideally you want them to have 4 out of the 8. So number 1, low cost of production. Number 2, high switching costs. So if I switch out my iPhone and go to a Galaxy S whatever, I'm gonna hate that I'm not connected to iCloud and everything isn't automatically backed up. Number 3, network effects. So are we tied in? So Facebook, Instagram, TikTok, LinkedIn have all built a community, a network that we're tied into. Number 4, intangible assets are very key. The value of the brand is very key because so the Lakers, Apple, Microsoft, those all have tremendous value, and it knocks up the market share price of the company. Brand loyalty is key. So EYL's built brand loyalty. Nike. Even if we go back in the day, Bad Boy, Death Row, like those had brand loyalty and a certain amount of fans that loved them no matter what. A high retention rate. So are they not turning over customers constantly? But this is one of the most important ones. You want to invest in companies that almost have a legal monopoly. So at one point, Facebook had that, and Zuckerberg is our generation's Gates. And we was talking to Mike about Stryker. If you've ever been to a hospital, you've seen a Stryker bed internationally. You need to look at companies that are teetering on the line of almost having the feds come in and break them up as a monopoly and say, you guys are doing too much. This is antitrust. We need to, because once you have a market corner, I'm going to be honest with you. Competition is bad for you as a business owner. I would love if we were the only YouTube investing show. And I love Kramer and everybody else. And I love Josh, right? But if we were the only one, considerably more market share. So look at the companies that have almost a monopoly in their sector, and those are one of the ones that you should look to invest in. And then futures, my last thing. It's what I want you to practice. I want you to practice sizing up. Now, 300 trades, you need to practice before you do this. But 41 contracts, and I want you to go for a target of 16 ticks. If you hit this target, you'll be at 20,500. Trading has considerable risk. It's not for everyone. If you're not disciplined, you should not do this under any circumstances. Consult your advisor first. I already got my glasses on, so I feel like driving, right? And then if you want to create alpha or return for yourself, you need to hit a target that is measurable that you can hit easily. I think any trader can hit 18 trades for the year. Type yes in chat in all caps. If you hit 18 doing this, if that number will change your life. For some of you, even one trade. But the biggest thing you can do to set your career straight and also have less drawdown is to limit the number of trades. And for me personally, I call my plan Black Wolf Alpha, right? You have to only do 18 for the year, knock those out. And then once you are able to do that consistently, the money will pour into you. The thing that I'm seeing in trading right now, everybody's trading and everybody's winning first 2 months, 3 months, and month 5 through 10, you guys are blowing up your account. And then you are having all these devastating horror stories behind it. Cap the number of trades that you can take, set a goal that you can hit on your end in a few trades, and you'll be A-okay. I love you guys. And I'm sorry we had mic issues, but things happen. As entrepreneurs, you have to learn how to adjust the same way you would in your investing and trading plan.
That's it. That's it, ladies and gentlemen. Great presentation, as always. And yeah, you know, technical difficulties is part of the game plan. And that's why I like Market Mondays, because it's a live show.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.